Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Hello, welcome everyone. Good morning. If you are ready to go and you can hear me, I want to do a sound check. Give me a thumbs up if my video and audio is coming through fine. Let me know everything is working and let me know that everything is coming through. Good morning, Andrew. Good morning, Another Mutant. Good morning, Lee. Good morning, Kwanye. Okay, looks like everything is good to me. Let me just adjust this a little bit. Wonderful. Thank you all for joining me this morning and for helping us get started, giving me that sound check. I'd like to try something different this morning. Before we get started, we have a lot to talk about, certainly, especially since this is the beginning. Actually, no, this is the end of the second half, the first half of the year, and the beginning of the second half of the year. I want to know what some of your goals are for today's session, for today's live stream. What do you want to get out of this? Part of this is for me to understand what you want to learn, what you want to understand. Part of it is to make sure that you are engaging and it's a little bit of accountability. What's wrong with YouTube this morning? Let me see. Let me take a look on my YouTube stream. It seems like YouTube, we've got people coming through on YouTube. Doesn't seem to be a huge issue. Let me double check on my end. If you are not having problems through YouTube, let me know. Looks like it's fine for me. Looks like YouTube is running fine. If people are streaming in, it takes a little bit of time. Just to remind all of you, this week is non-farm payrolls week, and non-farm payrolls is being released on Thursday, not Friday. So we will be live trading non-farm payrolls with you on Thursdays this week. So I think it'll be pretty interesting. Last month, we also traded non-farm payrolls with you, but I wasn't around. Boris, kind of led the charge, but I'm happy to be on the desk this month for non-farm payrolls. So on Thursday at 8:10 a.m., we are going to be live trading non-farm payrolls. I'm just going to show you real quick. Let me share my screen here. Hold on. I'm going to share my screen. All right, so you should see my YouTube screen. Live non-farm payrolls on Thursday at 8:10 a.m. So definitely join us for that. It's going to be a very interesting, exciting day because we've got non-farm payrolls. It's the U.S. data dump because markets are closed on Friday. We also have to tread much more carefully because markets are closed on Friday. It is a lighter trading week in terms of volume overall. And the reason why I say it's a lighter trading week in terms of volume is because many U.S. traders are off the desk on this week because the U.S. markets are closed on Friday. It's kind of one of the lightest trading volume weeks aside from Christmas and Thanksgiving that we generally see. So because of that, we have to take that into consideration in our trading. And what it means is that we're probably going to have to be much swifter, much more nimble, or we may see some exaggerated movements and quick exaggerated movements depending upon how good or bad non-farm payrolls is this Friday. So regardless, it's non-farm payrolls week. It's going to be a big week for the markets. And I want to invite all of you to live trade with us on Thursday this week for non-farm payrolls. So it seems like, yes, Paige is saying that she, I think, wants to learn how core fundamentals work and how to pay attention every single day. And, I'll go through some of the resources that I use, but in general, fundamentals are important. I'm glad many of you are here to join us to talk about this. Why is the market going up? No deals, tariffs are coming. Why is there all this optimism? That's a really, really good place to start, Park, which is why in the world are stocks, at record highs And could it continue to rise? So I'm going to remove my indicators, and I'm going to show you the monthly chart of the S&P 500. I don't really even need to show you this monthly chart, but it kind of shows you the magnitude of the moves that we have seen. And let's take a look at the percentage change since the beginning of sorry, let me just zoom in a little bit. So this is a monthly chart, and actually let's go to a weekly chart. It's a little easier to see. Since the beginning of the year, we have not seen a huge move in stocks. I mean, it's okay, about 6% in the S&P. But since the bottom, oops, sorry, did not want fibs. Since the bottom that we saw in April, stocks are up almost 30%. So we have seen, even on a year-to-date basis, let me get rid of this one. Even on a year-to-date basis, stocks are doing, being up 6% for, I don't think I drew it perfectly, but pretty much being up. Let me remove this. Let's just start from daily. That would be the most accurate assessment. So January, okay, so we opened over here. So yes, so being up about 5% for the year is pretty remarkable given all of the uncertainty that we've had in the markets. So Park is asking a very, very good question. Why are stocks at record highs? What is driving this move? And I am going to explain it to you. A lot of this has to do with expectations, how and the market in general, pricing and, trading always has to do with expectations. That's all what I tell all of our BK members, where every single day, we look at fundamentals, we look at technicals, but one of the most important things we look at is sentiment. So in terms of sentiment, the market sentiment got very, very negative, when Liberation Day was announced, when, Trump indicated that, they were going to have these aggressive tariffs. And that's what triggered this, move, this sharp sell-off in April. But since then, sentiment there's still a lot of uncertainty. There's been a lot of volatility. But I think that, sentiment has certainly improved a significant amount. So let's ask ourselves, and give me this moment to type this in. Why are stocks at record highs? And feel free to type into the box if you've got things that you want to add to this list. Now, number one, it seems like, Liberation Day, there's a lot of fear and concern created by the tariffs, but now we're in the process of, trade deals and trade negotiations. I mean, just Canada is back on track after dropping their digital tax. So the market the uncertainty is trade tariffs are beginning to recede. And we're moving into a phase where it's going to be much more about trade deals. And, Trump thinks that they can meet most of their trade deals by the July 9th deadline, and that it doesn't need to be extended. So, market thinks that with the conciliatory agreement with China that, we can get some positive trade deals. Number two, de-escalation of Iran-Israel conflict. That's also a pretty big deal. So a lot of the uncertainty was created by tariffs and geopolitical risk, and now there seems to be a de-escalation of the conflict between Israel and Iran. This is subdued inflation. Now, I couldn't really say this inflation is subdued overall, but it's not, evidence shows that inflation is, especially in the US, is not rising as much as everyone anticipated, everyone feared as a result of these tariffs. And so, the inflation scenario is starting to improve, paving the way for a possible Fed rate cut. And it's almost hard to believe that the Fed did not cut interest rates this year at all. In the context of all of these central banks cutting interest rates. The Fed has not cut interest rates at all. And so we're looking at the first 2025 interest rate cut for the Fed in September. And then number 5, the US tax cut budget bill is gaining traction, is moving forward. So, the legislation to extend and deepen the 2017 tax cuts are happening. So, Park, you're asking, why are stocks at record highs? Why all the optimism? It has everything to do with expectations. Expectations were so negative, after Liberation Day, after, the U.S. joined an attack on Iran, that now that some of these things are receding, investors are looking at this positively. They're looking at stocks at record highs. And they're looking at stocks at record highs because of these 5 reasons that I outlined. But some of you are also bringing up really good points. Yes, tax cuts, are coming. Fed, another mutant, my MVP for the day. You are spot on. You're saying exactly what I said, and I hadn't been looking at that yet. Yes, FitBoy. GDP Q1 was very bad. I don't understand this expectation thing. Well, the market has very short memory. So, there was a very aggressive sell-off. There was the Iran tensions. And now that some of this, now this is relief in the markets. And another mutant says, I don't see this optimism. But there's one very important thing that, all of you make really good points. And I think you're absolutely right in commenting that U.S. data is taking a turn for the worse. Throughout the first half of the year, U.S. data really wasn't that terrible. The unemployment, we were worried about jobs, and the unemployment rate pretty much remained around, 4.2%, which is the lowest level that, we had seen in a while. Also, consumer spending, up until last month, didn't really fall that much because everyone was buying ahead of the tariffs. So the data wasn't that terrible. Now, we could be beginning to see some of that weaken. We could be beginning to see some of that deteriorate. And some of your concerns, like another mutant says, I don't see optimism. King Shark, what are you saying? Macro lining up. We deserve this after the bears clawed us in April and May. We'll have to see. But it is absolutely true that in my opinion, that data is taking a turn for the worse. And, one of the most important pieces of data every single month is the non-farm payrolls report on Friday. And there's a very good chance that the non-farm payrolls report could end up being softer, showing the increase that we've seen in jobless claims. Let's take a look at this. Okay, hold on. Let me refilter this for all. Let's look first at what the market is expecting for non-farm payrolls on Friday. Market's expecting 120,000, which I think is still a relatively high amount. The 4.2%, this is, 4.2% unemployment rate. You can see here is, we've been hovering around this amount. It's not, the unemployment rate is expected to rise, but as of right now, it still remains relatively low. So the market is expecting non-farm payrolls to drop for the 4th consecutive month. Will it be 120? Will it be 110? Will it be 100? Obviously, the weaker number, the worse it is. The stronger number, the better it is. But let's take a look at jobless claims. Where's my jobless claims report? Unemployment claims. So unemployment claims have been rising. These peaks, just from a very bird's eye view, these peaks are a lot higher than these levels here, and they're sticking up there for longer. We had peaks before, right? But they pulled back quite a bit, but these peaks are quite high. So there's a lot of evidence to believe that the labor market numbers are going to be weaker. We have stagflation depending on how tariffs hit. That's true as well. Haul time prices at the pump are falling. And as you said, can't cut into rising inflation. I said that last week. Can't cut into rising inflation. But, inflation is, beginning to ease. So we go back to the question of not only, where's my chart? what has driven stocks to record highs, which is all these reasons that I have outlined. But the real question that all of you want to ask is, will stocks continue to rise or will they fall? I mean, this is the question that we all want to know, right? Not so much what's happened, but really what could happen going forward. And, there's two things to consider. Number one, yes, data is weakening. And I think this week we will see that data is weakened. And this week we could see stocks, actually pull back from their highs. I think there's more downside than upside risk in stocks this week. However, I want all of you to keep in the back of your minds, we've got this July 9th tariff deadline, which is not until next week. But corporate and investment spending has been held back by the uncertainty related to tariffs. And so if the tariffs are not so bad, meaning that, maybe it's 10%, maybe we get more trade deals, and maybe, those numbers that we've seen before start to come down, and tariffs average, let's say tariffs average below 10%, and China gets hit with only their 30%, which is possible, indicating that trade tensions ease, and we get past all of this, we get past the tariff uncertainty, then these businesses are going to be spending again. And if these businesses spend, stocks, yes, could continue to hit record highs. Now, of course, that's a big if, but I do think it's important to remember that a lot of corporate spending has been held back because of all the uncertainty created by all these things that we've listed over here. And if that is lifted, stocks could continue to rally. Now, of course, I'm skeptical of, a continuation of a rally with no pullback. I mean, it's very realistic that we could remain in an uptrend. And let's say we get a little higher. It's very realistic. We can drop back down to this region, 6,100, or even this support area, 6,000. And yes, still be within an overall uptrend. But we could still pull back. And with less uncertainty, we could see more aggressive buying. So, at the end of the day, it still has to be data dependent. I think that non-farm payrolls is going to be weaker this month. And I think it may not meet up to the 120,000 forecast. So that could drive stocks lower. Maybe it'll consolidate ahead of the July 9th tariff headlines. And if the July 9th tariff deadline shows some major deals being announced, we could see a bounce back again. So the next 2 weeks is quite important. It's quite crucial. Also maybe we'll get some clarity on maybe the Senate will approve the budget bill and those tax cuts will be passed. So there's a lot of things that could kind of keep the momentum going, but not before a pullback, in my opinion. That could very much be triggered by this move. So what's another question that, kind of is on everyone's minds? The US dollar, right? I mean, euro, if we go to our weekly chart, our monthly chart, is at a 3-year high. Sterling hit a 3-year high. Swiss franc actually hit a dollar Swiss hit a 12-year low.
Okay.
Yes.
I have a question about that because it seems the most conventional trade right now is short dollar. Everybody's convinced that the dollar is collapsing here. I'm wondering if you think that there might be actually a turn in the dollar here, and if you do think what could cause the dollar? Because I think it seems like everybody is positioned against the dollar right now, and we could be vulnerable to at least a correction.
So you bring up a very good point. So as I was saying, the next question to ask is, the dollar's been very weak. What's driven the sell-off, and could it continue to fall? So Boris brings up a very good point. Last week, this our heat map showed bearish dollars. This week, you see a lot of neutral. You see a lot of neutral for some for the reason that Boris said, is that I do not think that the fundamentals affecting the dollar have changed at all. I do not think that the fundamentals affecting the euro has changed at all. And BK members can click on this for more detail on my outlook. But I do not think that any of this has changed at all. However, as Boris correctly points out, the dollar has gotten very, very oversold. I mean, the euro, what is this? 1, 2, 3, 4, 5, 6, 7, 8 straight days of gains in the euro dollar. So 8 straight days of gains in the euro dollar. And, we're finally beginning to see a little bit of a pullback. Now, part of the reason why we're finally beginning to see a little bit of pullback is because we don't really have much going on from the U.S. today. We only have Chicago PMI. That's the only piece of U.S. data we have due for release today. And then we really don't have anything. Tomorrow we have the ISM and the JOLTS report, but today we have nothing. And so that's pulling back. And also because we had weaker German retail sales and what was the other number that came out? German import prices. So weaker German data. So, and weaker data abroad. So, in the very near term, yes, the dollar has gotten very oversold. And today we have some weakness in Europe data and UK data, and we have no US data. So investors, and it's also a thinner trading week. So investors are using this excuse to basically sell the dollar. But I mean, what has been driving the dollar lower? Well, I mean, the reason why the dollar has been so weak is because, number one, we talked about this a lot. We have talked about this often, where we've said that the tariffs is seen as negative dollar, not positive dollar. So the tariffs have been seen as being worse for the U.S. economy than better. And so that has been, one of the leading drivers. And also, we have been seeing a drop in U.S. Treasury yields. So the drop in U.S. Treasury yields since May, which basically coincides with the second push higher in the dollar, push higher in euro, weakness in the dollar. And then we're also seeing a desire to diversify into, euro, for example. And euro has been one of the biggest beneficiaries of that. On top of that, these central banks, they have cut interest rates, especially the ECB, but they are nearing the end of their easing cycle. I mean, only one more rate cut is expected from the ECB, whereas the Federal Reserve, they have not cut interest rates at all this year. And they are looking at, stepping on the gas for interest rate cuts. So if you think about this, and I always talk about putting yourselves into the shoes of central bank. One is ending, one is beginning. When one is beginning, or the market's waiting for the one to begin, that is why we've seen this huge dollar weakness. And of course, as another mutant who's really, truly our MVP today, we've got a massive deficit. And, Doge was supposed to cut spending, but now we've got this huge bill that's going to increase spending. And so people don't like that. So this is part of the reason why we're seeing all of this and why we're seeing the move lower. So, Aaron Tall is having troubles joining our free community. This is a really good time for you guys to join our free community if you haven't, because I do videos like this every single day. And, let me just get this going here. bit.ly. Here we go. Join BK Traders. So make sure you join this community. There's a lot of really great information here. Put your information in there. And then, you get put into our trading community where you can get so much valuable information, including new videos that I post and everything. So, I'm just going to let this load up. Sometimes it can be a little sluggish, which, I do find a little annoying, but, I'll load up and we'll come back to this. But anyway, okay, great, Judy. What are we doing? We're talking about what's moving in the markets and what's moving the dollar. So, if you're in the community, I post a lot of stuff, a lot of good stuff here, and we also have access to our free trading courses and things like that. So lots of really good information.
Sorry, I just noticed that Judy is posting from X, which means that maybe we're if you're on X and watching us on X, you could actually comment. So give it a try, because this is the first time I've seen X actually working for us in comments, which is great. So come on in there and give us a shout out. Have any questions on X? Come join us.
So like we said, free community, go to bit.ly, join BK Traders, click on instant access. I'll put in, one of my dummy accounts here, You can email me here, but I never check it. Actually, I think I have an account here, but let's see if they'll let me in. So you sign up and you get here. Don't worry, this is just telling you about an offer that we have, but your access is on the way. So check your email access box and you click on the link that goes to your email, and then you will be reloaded into the trading community that I just showed you. And if you're just joining, as I said, we're live trading NFPs on Thursday at 8:10 a.m. So make sure you join us there as well. Okay, so what's going on this week? Fundamental heat map, neutral, and a whole bunch of stuff because the dollar is getting very, very overstretched. And the move is getting very, very extended. We don't have much in the way of U.S. data today, and we have weaker Eurozone and UK data, all of which is contributing to some profit taking on the short dollar position, some profit taking on the long euro positions. If we look at the monthly chart, I'd drawn this earlier. There's a bit of support right around here from these lows here. These lows here, there is a bit of support there, but I think the real support level is really going to be around here, which is this spike low here. And this breakdown where it broke down. It broke down, it tried to rebound or retested it and failed here. So this 118 or 119 is really the next major support level in euro dollar. But euro is getting quite overstretched along with other major currencies. So this week, we'll take a look at the economic calendar, and we've got, quite a bit of data released, but the most important is going to be, as we said, Powell. So starting off on Sunday, let me just go to Sunday if you bear with me, sorry. So we take a look at Sunday. Pretty much, if you look with me, it's basically a sea of red. There's a lot more weaker data than there is stronger data from other countries outside of the US. This is a reason I believe that the dollar, my heat map shows that I'm neutral dollars because I don't think that the US fundamentals has changed. I think the data is going to weaken even further, but the dollar is getting very oversold. So we may see a bounce before we get to Thursday's non-farm payrolls report. Eurozone, same thing. European data has been kind of mixed. It's mostly better than weaker because we have stronger IFO and PMIs. But ECB is nearing the end of its easing cycle. And, it's been a big beneficiary of diversification outside of the US dollar. So in the grand scheme of things, 120 euro is very possible. Sterling, Bank of England has been, they were reluctant to cut interest rates at their last meeting. There's expected to possibly cut interest rates in August. And data, has been mixed, weaker data than the Eurozone, but still neutral this week because we don't have much in the way of UK data. Still bearish Aussies. They're actually the only major central bank expected to cut interest rates this month. Let me repeat that, the only major central bank expected to cut interest rates this month. Data has been taking a turn for the worse, so I'm bearish Aussies. CAD, I'm neutral. At first, Trump has said they canceled the trade talks that sent the Canadian dollar selling off aggressively. And then, over the week, right before, I think this morning, Canada dropped its digital tax. And so now the talks are back on, and they believe that they are going to be able to reach an agreement by July 20th. So the outlook for the CAD is neutral. And we don't have major CAD data until, I think later in the month with the CAD employment report.
Yeah, I was just going to chime in on the CAD story because it's very interesting. I think Mark Carney is a much more pragmatic leader than Trudeau was. And when Trump pushed back on this whole digital tax, which is really actually a horrible policy decision that many Canadians even disagree with, he right away pulled it back. I think that's going to create much more constructive dialogue. So maybe we're finally going to get some kind of a trade deal between U.S. and Canada, and all of that tension could start to go away. That could probably, if that happens, that probably should have a little bit of a longer term relief for the.
But oil came back down a lot, so there's a lot of tug of wars between both. And so if we look at the dollar CAD chart, dollar CAD had been one of the strongest as well. Lower right hand corner of the chart, we are nearing a trade agreement, but remember, July 20th is probably the date, and so there may not be information between now and July 20th. But what there is information on is the fact that oil is falling. Canadian yields are falling. We don't have much in the way of CAD data this week. So maybe we could get a little bit of a bounce in the Canadian dollar, but we'll have to see. Or most likely, we'll probably get, I think the greater chance is just consolidation. Probably not new lows, but probably just consolidation.
This is actually like a really good example of where the price action sometimes races way ahead of the news. And when the news catches up to the price action, I'm talking about, let's say, positive news for the CAD, the very fact that the price action has already, had CAD strengthened so much means that you may not necessarily get the punch from the news that you think it does. So it's always a balance between understanding where the news is going and how much of the price action has already been reflected in the charts. So Kay is absolutely right. Even if news is positive, doesn't necessarily mean that Loonie could rally here, given the fact that it's rallied quite a lot already.
So what do you do? What I would do is I would use my indicators. I would wait. So I know that dollar CAD looks like it's bottoming. My background so this is my zip chart. The true signals are the white candles. So these are sell signals in the euro dollar. This is a signal last night, which is not valid because we don't trade Sunday Mondays. But what is showing me is that the background is red. It's above the indicator line. So I'm going to be looking for two things. I'm going to either look for the background to turn green and for dollar CAD to stay in quote unquote the buy zone, which is what I call like a tier 2 trade. But if the background turns green and dollar CAD starts to move up, that would be a signal for me to buy. What I would love to see is, and it probably will come, simultaneously, is for the indicator line to move up. And I really want to see a white candle. If I see a white candle like this, these are zip buy signals. If I start to see some zip buy signals in the Canadian dollar, I'm going to be looking to buy dollar CAD. So when we don't know what's going on, what we do is we wait. We wait for our signals, our real signals to set up, and then we go long in the trade. Now, of course, dollar CAD is not the only Canadian dollar pair we look for. I love trading Euro CAD. And, look at this, Euro CAD zip buy signals over here on Friday. This is coming at 12 noon. So we don't trade 12 noon. I trade, between 6:30 and 8:30 a.m. New York time, and the Asia session between 8 p.m. and they carry it over to the morning. So this is 12 noon. We never trade 12 noon, but these are very valid, especially this one, 5 a.m. This would have been our trade. 5 a.m. I wake up at 6 a.m. to put on our trades. This would have been a confirmed zip buy signal in Euro CAD. So the point I want to make is not to show you the efficacy of my strategy and how wonderful it's worked. Although I have to say, if you looked in the community, let me show you this. I'm very proud of this. We have, where is this? We made 424 pips in the month of June. And, while that is wonderful, 424 pips, no losses since June of 2023. So no losses in 2 years. It is made by week-to-week trading. Some weeks are good. Some weeks are just a little bit. But we do it every single week, every single session, trade by trade. And not only does this prove to me the reliability of my own trading strategy, because, these are hundreds of thousands of trade samples, but it shows you the consistency of the strategy. So going back to what we said, when we don't know what's going on and the daily chart shows us nothing, what I would do is I would wait for my setup. That could be your setup. Your setup could be something different, whatever it is. But for me, I will wait for my setup in my perfect time frames, time zones that I trade. And that's when I would take the trade. So when you don't have clarity and you don't have a signal, you don't know what's going on and you don't know what's the chart is telling you, wait for your setup to happen. So going back to the heat map, I was saying that we are with Canadian dollar, we're neutral, looking for opportunities to looking for the setup to happen. Kiwi, I'm bearish because New Zealand data has been quite weak. And I think that, New Zealand's like Aussie, they're going to be cutting interest rates soon. And then I'm neutral Swiss francs and Japanese yen, although I am more bullish than bearish these currencies. So going back to the calendar now, mostly see a red. Another reason why the dollar could potentially rebound in the front of the week before we get to non-farm payrolls. Today, we have Chicago PMI, not a huge market mover. And then that's it for the U.S. These pieces of data, I mean, ECB President Lagarde is speaking, kind of interesting, but I don't think that she's going to say anything that market moving. We have Japanese Tankan survey numbers, which are interesting, but not huge market movers. Tomorrow, we have final Eurozone PMIs. We also have Swiss retail sales. I love to trade Swiss, so I'm going to be making sure I keep an eye on this data. But tomorrow, the most important release will be the flash PMIs from the Eurozone. And the flash PMIs from the Eurozone are expected to be, you can see the market forecast is for a little bit stronger. It'll be interesting to see whether that or not that happens. What did we have in the German data? We have here, German PMIs. It'll be interesting to see what happens because the German PMI was actually weaker. German PMI is flat. So oftentimes talked about how do you predict economic data? It's really not that hard. You look at other economic data that has been released that's similar. So this is German inflation data. Now, Germany is the largest country in the Eurozone. So if German inflation data was weaker, then chances are the Eurozone inflation data probably has more downside risk than upside risk. What does that mean? What does that mean for the euro? Does that mean that we could have more of a correction in the euro or a resumption of the rally? What do you think? I want to make sure you're paying attention. Do you think this could be euro positive or euro negative? Type into the chat box. This is me holding you accountable for paying attention. So do you think that if we have German inflation data weaker, then we have Eurozone inflation data weaker? Is that going to be euro up or euro down? All right, show me someone that's paying attention into the chat box. Another mutant, where are you? I know you're paying attention. Maybe the chats are delayed. Let's see. All right, here we go. Down by Andy, by Live MAH, Andrew. Yes, possibly euro down. So I'm laying out the landscape for you, which is that, number one, euro is deeply overbought. I mean, if we add in one of my favorite indicators, RSI, you will see RSI has gotten above 70 into overbought territory for the euro dollar. So euro is deeply overbought. We have no major US data until Thursday. And we have the possibility of weaker Eurozone. We had weaker German inflation, retail sales, import prices. We have the possibility of weaker Eurozone inflation data. So yes, the fundamental landscape suggests that euro could see a deeper pullback front of the week, tomorrow, maybe the day after. What is my zip chart showing me? Zip chart showing me euro dollar buy, but of course I told you I don't trade Sunday, Mondays. And we're pretty close if we drop below here for one reason or the other. And this could happen. This is a 1 hour chart. This could happen throughout the course of today into tonight. When I trade tonight at Asia, if I see euro down here below the indicator line, I'm going to be looking to sell euro dollars because then at that point I'd have the technicals and the fundamentals on my side. So that's what I'm going to be looking for. So yes, another reason why euro could fall if flash PMIs is weaker. Tomorrow at 10 o'clock, we have a bunch of central banks speak. ECB President Lagarde, Bailey, Ueda, Powell. The reason why they're all speaking at the same time is because there's an ECB conference that they're at, so that they're all speaking at the same time. Then we have ISM manufacturing data, which is coming out. And you can see the market's looking for stronger ISM manufacturing data, but the Philly Fed and the Empire State was weaker. So that could be lower as well. Jolt is going to be very important. If Jolt is weaker, that could be a negative for the dollar. Maybe not against the euro, but possibly against other major currencies. So tomorrow we have some manufacturing PMI. ISM isn't hugely market moving, not as much as service sector ISM, but it's definitely interesting. Australian retail sales also due for release. And so that market's expecting a rebound. Wednesday, we have more leading indicators for non-farm payrolls, the ADP, the Challenger, nothing else really going on. And then Thursday, this is the big day. We have some revisions to PMIs for Eurozone. We're not going to worry about that. Instead, we're going to focus on non-farm payrolls. Now, the downside of the non-farm payrolls being released early this week is that ISM services, which is generally our most reliable leading indicator for non-farm payrolls, is being released afterwards. But still, I think, even without it, we'll have a good opportunity to trade, and we'll have a good opportunity to react to the non-farm payrolls when we trade it on Friday. So technically, Euro obviously in overbought territory. I'd like to see a close below 117. A close below 117 would, definitely indicate we could see a deeper correction towards 116. Dollar Swiss also finding some consolidation here, but no signs of the trend being over. The reasons why I like to have the 5 SMA, which is the pink line here, is because it really shows us when the market could be beginning to turn. Dollar yen, dollar yen did not fall as much as the other pairs because we had a tug of war between yen and dollar. So we hadn't seen as much of a movement there. And so I think that we could see a bit of consolidation here, and maybe dollar yen will bounce sooner than some of the other major currencies. Dollar CAD, remember, we're watching that zip, already signs of a possible retracement higher in dollar CAD. Pound, much greater chance, in my opinion, getting weaker than the euro of a correction below 136. Aussie, just consolidating on bearish Aussies more than the other currency. I could also see more correction in Aussie and Kiwi. These look like flame out candles to me. So I, would be definitely looking for opportunities to sell Aussie and Kiwi this week. All right, before I turn it to live trading with Boris, don't forget Boris live trades after the session. I want to take questions. So common Nigerian, non-farm payrolls is on Thursday this week, but because U.S. markets are closed for a holiday on Friday. So we will be trading non-farm payrolls on Thursday in the morning at 8:10 a.m. I put, just go to our YouTube channel, click on live NFP. We're live trading NFP at 8:10 a.m. Do you want to answer this question since you popped this question up?
Yeah. Shivadas, if you want to trade prop, you absolutely want to use Apex. And as a matter of fact, Apex has an 80% discount. I'm just going to put the link in here right now. So be sure to use our link over here, say BK Save, and you can use any of the Apex platforms. You can use Tradeovate or Wealth Charts to trade. So yes, absolutely, that's the one you want to use because it's the best way for you to be introduced to trading with incredibly small amount of risk. You're not going to risk any of your own capital. You'll just be doing a valuation, and that's going to teach you trading.
You pull this up? For some reason, this is not working for me, Boris. I'm just typing it in. Oh, because I have a .com. What an idiot I am. All right. I don't know. It's not working. Maybe you want to.
Sorry, what's not working?
Why don't you share your screen and actually, because I have to type this in, and actually pull up the page, Boris, and show them how to apply the discount code.
Yeah, absolutely. Hang on. Let me just pull this up. Okay. So, all right, this is the Wealth Charts platform, but what you want to do is you want to go to apextrading.com right over here. You would log in, right?
So wait, what if they're not? What if they're new?
Sorry?
If they're new.
If you're new, sign up over here.
We're assuming they're new, Boris.
Okay, so if you're new, you would just sign up right over here, right? Like, let's just say you're brand new. You would sign up over here.
And you get 80% off these. Let's slow down a bit, Boris, all right? So you get 80% off these rates by using the BK Save code. You can choose, show them what they have. This is Wealth Charts. There's different programs. And so what does 167 at 80% off mean? How much is that per month for the
that's literally less than $50. It's I think $43. So it's an incredible saving. This is the most popular challenge, the most popular account that everybody chooses. I recommend either the small or the 25 or the 50 because these have the best risk reward ratios. It's the easiest one to pass and the easiest one to get funded. So 50 is really the sweet spot. Everybody uses that one. It's less than, I think it's $43 when you have the 80% discount. So
Okay,
it's
can you click on
incredibly
that? Can you click on wealth? Can you click on that and show them how they would apply the discount code?
good. Yep. And you would literally, you put in your first name, your last name, your email address, your username, choose a password. I guess you fill all this out, and then you would put the coupon code. The most important part is you would put BK Save over here. If you put that in there, you get the absolute biggest discount possible. So it's really, really important you do that. If you don't, you're going to be paying full price. So absolutely make sure you write BK Save in there, and then you're going to be able to get a huge discount on the account, which is really why the reason why Apex is such a great partner of ours. We love the fact that you can have all these opportunities. And of course, what I recommend is that you just buy like 2 or 3 of them, because right now that sale is going to go away. If you have 3 or 4 accounts, it's going to make it much easier for you to live trade the way I do, where we can separate by, we trade gold in one account, we trade S&P in another account, we trade NASDAQ in a third account, we can trade trend in one account, counter trend in the other account. It really, really, really helps you segregate your risk, and it helps you to get to your target much faster, because you're completely dividing your trades into the best possible trades you can have.
Yeah, and this offer ends July 8th. So you've got, just a week to take advantage of it.
Yeah. Just, you buy 3 or 4 at a time. Trust me, you're going to use them all very, very quickly, and you're going to regret it. You're going to regret it if you miss the sale. So
and MI Hope says this discount applies to monthly fee or just initial set. It's 80% off the first month and reoccurring. So you lock in that discount.
Correct. But of course, one of the things you see is that when we try and trade, we actually try to get the account funded in the first month or so with our process. I'll talk to you guys.
How do you do that? I mean, can you share more light on how to get it funded? And can you show who's gotten funded? Can you show more information on that?
Well, we have lots and lots of guys. Everybody who's in the room right now, feel free to just raise your hand or just let people know you've gotten funded. I know last week we had 4 or 5 people fund the accounts literally during live trading. Some of them. I mean, Ali did it. I think John did it. I forgot. There's a lot of people in coaching that got funded. Almost every single week we have 4 or 5 new people get funded. What we try and do is we trade very, very small, very high precision, very high accuracy trades, and we divide that. Let's say there's a $3,000 target you got to make, right? In 30 days, that's literally only $100 a day, right? If you think about that, or 20 days, it'd be $150 a day. And we subdivide it to try to make $20, $30 trades in that account. So every day we try to make $150, $160. You can see, for example, here's my wealth charts account. The funded level here is going to be 26,500. We're at 26,122. I'm within inches of this thing, and I'm just trading very small but very consistent every single day, and that is how we get funded. That's the key to our success. Is we don't try to have a hunch, bet a bunch, get funded in just waste a lot of accounts by trying to do a single trade funded, which by the way is fun, and I'm happy, we can certainly do that as well. If I have the opportunity this week, I'm not sure yet, depending on how I'm feeling, I really, really want to do what we call Marathon Wednesday, where everybody who's listening today, just be prepared, because I haven't decided yet, but I'm almost.
Why not do Marathon Thursday when we'll weave into non-farm payroll and marathon it all in?
Yeah, I mean the Marathon Wednesday, where I was going to come online at 6 in the morning and trade till 12 noon, literally 6 hours, multiple accounts, and try to get funded in one day on large trades, and then try to get funded on the accounts we already have in smaller trades. So there's lots of different ways. The point being is we have a great tool, we have a great methodology, and people trade in 100 million different ways in trying to get to their target, and they achieve it. That's really the key thing. It's the ability to give you the power to get funded with the tools that we have that really, really works. So whatever is your approach, that's what we work on.
So I'm going to turn it over to Boris for live trading now. You actually get to see everything he's talking about. I thank you all for joining me for our market outlook. And don't forget, Thursday we're live trading non-farm payrolls at 8:10 a.m. So I expect to see all of you there. All right. See you then.
Thanks, Kate. Thank you so much. Thank you. Hi guys. So you can see I'm totally under the weather today, right? I sound like a frog, and I have to, you have to forgive me for coughing through the thing. I was feeling really horrible this weekend, but I feel like I crossed over the Rubicon here, and hopefully sleep it off one more night, and I can do like a marathon Wednesday with you guys where we trade lots of different stuff. But today, what I really want to show you, right, is so first of all, let me just sort of stop here. You'll be there for the marathon, Galavan. Ah, very nice. Okay. First of all, I want to make sure, does anybody have any questions about how to get an Apex account and how to use our discount to make sure that you get the biggest discount on the Apex account? No? Is everybody clear? I just want to make sure that we're totally clear on that. All right, guys. I'm gonna sound like a tuberculosis patient today, so just bear with me. So the thing that I really want to talk to you about today, because this is a very interesting, very subtle, very cool little detail that I think makes all the difference in the world in terms of just finding the absolute best. Like we already have the best, but I want to find the absolute best setups. That is setups that you try to eliminate as much mistakes as possible. As you guys know, and you can see, here's my trades over here. I had a long on NASDAQ counter trend trade. We had gold over here. Oh, I think I have to, hang on a second. Let me put this on a chart. Where's the historical stuff? Sorry, hang on a second, guys. Turn away. Chart global settings. Turn. Wait, why isn't it not showing me the history here? Oh, I'm in a different account. Okay, 109. Right? I'm on the 109 chart. Turn. No, trade history is on. Why is this? Huh. Sorry, because I was trying to show you that I had. Hang on, let me see something here. Oh. Hang on, guys. I'm sorry, guys. Just bear with me. I just spilled water on my computer. You're gonna have to wait. Sorry. All right, just bear with me a second. No, I'm just trying to do one thing here, which is MGCQ. Why isn't it not showing? It was showing before, right? Oh, here it is. Okay, sorry. I was in the wrong account. So, here you see this trade to the short side, the other trade to the long side, in the 103 account, right? I don't know why this is not showing. Okay, you know what? Screw this. Hang on. I'm sorry. I'm trying to show you exactly the trades I made for a very, very specific reason. It's a really important reason, so just bear with me as I try to focus on this. This is gold, right? And gold is negative trend. The blue line below the red line. We have two red dots, negative momentum, right? But there's a third element. It's an incredibly important element that I never talked about before, that I want to put your attention on, that makes all the difference in the world to making successful trades versus unsuccessful trades, right? What do you think that element is? I'm actually curious. Everybody who's looking at this particular trade, what made this trade successful? We have the blue line, the red line, negative momentum, right? One below the other. There's this one other thing that it sort of really, really hit me hard as I started looking at trades that I think we need to start looking at very, very carefully. Anybody have any idea? Anybody want to chime in? Yes, no? Okay, I'll tell you. Not the RSI, no. It's actually quite simple. It's very, very simple. You see this blue line, right? The actual slope of the short-term moving average needs to be in confluence with the direction you're taking. So what you really want is, if you're taking a short trade, you want the blue line slope to be at worst flat, but at best negative. You want that slope to be falling, right? Conversely, when you're trading the other side, right? When you're trading the other side, right? And you're looking at this account here, right? What do you see here? You see green. This is counter trend trade, right? So obviously it's a counter trend trade. But the single most important thing that makes the counter trend trade interesting and possible is the blue line is rising. Like right now, we have a counter trend trade here, right? A green dot counter trend trade. Is the blue line rising or falling? It's falling. It is not a high probability trade, not a trade you want to take, right? Matter of fact, right now, if we're looking for a setup, the setup that we want to see is red dot. We know the blue line is falling. That's going to be our setup, right? That's going to be the good setup if we find it. Blue is 8 SMA. Blue is 8 SMA. Oh man! All right, guys. I'm just going to be coughing forever, so just forgive me. It's kind of a little hard to talk. But do you guys understand what I'm saying? Do you understand how important that is? That direction of the blue line gives you all the confidence in the world that you're doing it the right way, or you're putting yourself at unnecessary risk, right? You can even apply that when you're trading trend trades. Let me give you an idea. Here's a good example of like where okay, here's a great example. A great example of where your positive trend, right? Blue above red, positive trend, positive momentum, horrible trade for one simple reason. The blue line is falling. You're buying a falling knife. Right? In fact, the trade that you want to be doing, if you were trading, is the short trade because the blue line is falling. You have negative momentum. You trade that. Watching the blue line, right? In a perfect world, what you want is blue above red, blue rising, green dots, all systems go, right? But sometimes you don't get that perfect setup. But what you do get, so here we go. So here, remember I told you this is a good setup for us. Excuse me. We got two red dots. We have a negative blue line. If these red dots hold, we're going to go short this thing, and it's a trend trade. So we're going to put that into our 103 trend account. The only thing we need is the red dots to hold. So let's see if that happens. But that combination just gives it so much more accuracy to your setup. Again, not that it's always going to work, but it's going to work more. You're looking for as many positive reasons to have momentum go your way as you can. Like right now, this is we've got a minute left here, so we'll see how it wants to trade. A lot of times I've seen this where we have market opening 45 minutes, and they're going to reverse this move, and this whole red dot is going to disappear, and it's not going to be a trade for us. So let's watch it. See, the red dot disappears. That's fine. But the key idea is when you're watching these elements and you're pulling the trigger, having that final component really gives you a huge amount of confidence to take the correct trade. You guys feeling me on this? Everybody understand what I'm saying? In my very, very stuffed up nose way? Yes, no? I want to see some yeses in here. Oh, man. Thank you. Thank you. Thank you. Thank you. Yeah, that makes all the difference in the world. You know? Oh, so okay. So here we go. I'm actually going to buy. This is 109. I'm going to buy this. Why am I buying this? It's a counter trend trade. I'm in my counter trend account, the 109 account, right? Obviously, Rob yells at me for taking counter trend trades, and they're not as good as trend trades. But here's the thing that you kind of, if you're going to trade counter trend, what do you want really happening? You see this blue line? The blue line is kind of flat to starting to pop up, right? I already have the momentum on my side. The blue line is starting to turn. That gives me at least a reason, a really genuine reason to want to go counter trend, right? To see if this counter trend, trade is going to play itself out, right? So it's that component that really makes all the difference. Why is this? I don't know what's going on here, guys. I'm trying to. I'm going into global chart settings. Turn history off. Turn history on. Why is it? Is there another? Am I missing another thing here? Global chart settings. I don't know why it's not showing. The arrow, the entry arrow. Turn trade indicator. Turn. Huh. I don't know why it's not showing it up. All right. Anyways. Yes. Correct. And that's really the shortcut. We really zero it in on the key element that that I'm focusing on, which is you want to trade with the market flow. Now, in this particular case, remember when I'm taking counter trend trades, in a perfect world, I really should have been taking this green dot. You see, this green dot had a flat blue, actually rising, blue line. I should have taken this one over here, 94. I would have been, I'm late on this trade, and I may have to pay the price for being a little bit late. But because when we're doing counter trend, we actually just want to take the first green, in a downtrend, the first red in an uptrend, as long as the slope is on our side, as long as the blue slope is on our side. When we're doing trend, we want to have two. We want to have the couplet, but we don't always get to have the perfect solution. So, by the way, we're looking now into Nasdaq, right? And blue is still negative, right? If I get a red dot here, that's going to be an opportunity for me to get. Here we go, 48 seconds. Am I going to want to short this thing? If the red dot stays in place, yes, because lower lows, negative blues, negative trend, all the things are setting up to hopefully make it a play for me. "24 seconds left on the clock here, guys. 10 seconds. This is a trend trade, so it's 103. Wait till the candle closes. Don't pull the trigger. Okay, short. Okay, short on this account. The target is going to be Oh, I guess we filled the order on the gold. Remember, I told you we went short gold. 96.75. 96.75. Um, Nasdaq is popping against me. It's okay. You can't get them all. The critical thing that you see me here is I'm trading very, very small. So if this trade does not work, the next opportunity, I'm going to be able to repair this trade by just coming in at 5 micros and repairing this trade and making it work. But let's see how it plays out. So I'm a little confused, guys. I don't know. Maybe it's because I don't understand why I have the you guys can literally see the trades over here. 450. What is it? What's my target here? 96.75. So it almost came in very, very close. And we got filled on that. Okay. So at least you guys can see visually, what I'm doing. But that particular last pièce de résistance, that last variable is such a cool little thing for everybody to keep an eye on, right? It really, really, really keeps you from doing the last stupid thing that you possibly can. The X means that the trade got done. So the 0 is where the trade entered, and X is where my take profit happened. Is that clear, guys? So now, markets are starting to turn a little bit. That's fine. Not much really going on here today. The gold trade worked, even though I was a little bit late on it. But, oh, man. I'm sorry, guys. It's just, I know I sound horrible. I mean, honestly, Lily, if there was only one thing I was going to tell you today, it's just watch the slope of the blue line as your final critical element for entry. That's all you really, I make your day doing that. I'm 100% certain that your trades will improve if you just do that one last thing. So probably I should just shut up and not talk anymore because I'm gonna just rip my lungs out. Does anybody have any questions, guys? Does anybody have anything on your mind? We don't have any setups right now, so obviously we're just a little quiet. But you see me. I'm just crawling nice and smooth, There. David is asking a good question. It's because we're looking for very, very. You could do 1 to 2 instead of 1 to 4, but we're looking for very high probability setups, and because you have to remember that if I get stopped out, that's not the end of my trade. That's just the first part of my trade cycle, right? So the next time when I have a setup, quality setup, I'll do 5 micros and completely repair that trade and get the profit back. It's just that's the way I trade. But you absolutely could trade larger size, smaller negative risk reward ratios. There's 100 different ways to slice this cat. The main difference is that if I'm 1 to 2, you're going to just generate more stop outs. That's it. You're not going to be as accurate, right? And I try to be very, very accurate in the whole idea is to be very small, very accurate, very consistent. Just grow your P&L. That's been a very, very good model for how we trade the accounts. If you're really interested in the mechanics of all of this, I'm putting the link in here, guys, to my coaching, and you can sign up for coaching, and we talk about that in a lot more detail there. Gold kind of turning itself to positive. Okay, here's a great example. So let's look at this. This is exactly what I mean about not doing stupid things. Where's blue? Blue is still negative, right? The green dot over here, if we're going to take a reversal trade, not a good reversal trade at all, right? Not a good reversal trade at all because the blue is still negative. Only if the blue starts to flatten out or get positive and we get a green dot, do we want to just go against the, counter trend trade. Well, Derek, that's a I'm prejudiced, so you can't really. If you ask me, I love stock index futures. Okay, I think I'd rather blow my brains out than trade forex. But if you ask Kathy, she'd rather blow her brains out than trade stock index futures. It's really, really dependent on, what you like. Forex is slower, more leisurely, and therefore, could be good. So look here, guys. It's possible to take. You see, I'm really, really zooming in here. It's possible to kind of want to take this thing, right? But the blue is still kind of negative. Still not a great trend. Now, if this thing gives me a third green dot and the blue starts to flatten out and get positive, yeah, maybe that would be a decent counter trend trade. Honestly, Derek, here's the question that you want to ask yourself. Do you want to make 20 trades a day or 2? Or, let's say, or maybe 4, right? If you like doing lots of small, frequent trades and you're an ADD-addled person like everybody else in my room, futures is your game. If you sort of want to do more leisurely, longer-term trades, Forex is your game. Oh, my God. Guys, Jesus Christ. This is like the worst. I've been sick in a long time. You see how price is just not really pushing higher, right? Because market is just sort of very, very. Do we have news, by the way? I don't think we have news anymore, right? I think. Do we have? Oh, Chicago PMI. Did that already print? Let me look. Oh. We have Bostic. Chicago PMI was 40. Oh, Chicago PMI sucked. Wow. Huh. That's why the market turned negative. Chicago PMI was 40.4 against 43 expected. It's pretty deep contractionary territory. That's not good. Okay, so now, and I've really zoomed in, right? You guys really, really see this as a zoomed in speed. The blue is kind of flattening out. Now, trade here is very, very lackluster. But let's say, just imagine this thing pops. We get another green dot. That is a decent counter trend trade. It's a decent counter trend trade for us, right? Gold is just doing nothing. It's compressed around the moves here. But here I got a minute 20, 25. I have a green dot here. I'll take this trade because you see the blue starting to turn itself up. Guys, I'm gonna have to cut the trade short today because I literally can't talk and I sound like a someone with consumption from the 19th century. Jesus Christ. How's everybody else doing trading? And what are you guys doing today? Anybody having a good day? Anybody fun thing? I got 43 seconds left and I have a green dot. It's going to be last trade I take with you if I get the signal. So just to review, you have general trend parameters set by the green and the blue moving averages. You have the momentum moves set by the dots, and then you have the final trigger points when everything comes together. Eight seconds. No signal, guys. No trade. Try some garlic. Yeah, probably. Garlic and honey, right? That's supposed to be really, really good. Oh, starting to pop a little bit. By the way, I'll let you guys know. I know you guys are eager to get the wealth charts version of the dots only indicator. I'll find out maybe later today or tomorrow. When we can expect that. It may take a couple of more days, but I should absolutely have it for you this week. And in July, we're gonna just go hog wild on that. Martin. I can't put your comment up because you're not politically correct, my friend. But it's funny. I hear you. It is. NASDAQ is just very, very choppy today. 50 seconds left. See, it's very we're really, really tight, right? I mean, we just haven't really moved here a lot. 44 seconds left on the green dot here. This is a counter trend trade. So this is what I'm trying to tell you, by the way, how you want to segregate your trades. The 103 account is trend. 109 is counter trend, right? So you're segregating those accounts. You keep your business separate, and then what you really, really want to do is you probably just want to trade 4 of them. The great thing about wealth charts is you can trade. You can have multiple tabs open and just simply click through each tab and trade different instrument in each tab. It's really, really cool that way. 9 seconds left. Let's see if this green dot holds. Oh my God. Nope. Goes away. And this is, nope, it does hold. Okay, let's go. We're long here. The target is going to be 35.75. Let's see if this thing does anything for us. This is on a counter trend trade. Okay. 35.75 target. How high was this? What's the high on this one? Oh, this is 40. Okay, so we'll see. What does the dot indicator really do? If you think about this, it's just visually showing you the mathematical buying selling pressure, right? It's calculating mathematically into a visual format where there's likely buying pressure and likely selling pressure, and we're trying to exploit one or the other of those dynamics in the marketplace, right? That's all we're trying to do. It's nothing complicated, but to do this well, we really got to follow the rules. No, that's funny, Martin. That's funny. That's okay. Yeah. This week, by the way, I think is going to be kind of interesting. I was going to say it's going to be slow, but I think this week might actually be okay as far as trading. But the week after might be a little bit slow because we got the holiday, and then a lot of the news probably will have already filtered by then, right? We'll see. We'll see where the big beautiful bill is going to be at that point, as well as really, the really, really important part is where I think oil and geopolitics will be. Very slow, guys. Look at this, man. We're just just doing nothing here, right? 10:05. Just looking at the S&P here on the other side, it looks like the market just doesn't want to do anything, right? With total these kind of super quiet summer markets, you have to understand they happen, and you can't force it. And if they're they aren't moving, they aren't moving. We try to extract tiniest amount of movement, but sometimes even the tiniest amount of movement is not there. The big beautiful butt. That's funny. Guys, let's. I gotta cut this out because I sound really, really horrible here. And I got a meeting at 10:30. So we'll leave this be. I'll catch up with you tomorrow on how this trade goes. As I said, the game plan here, we always have plan B, plan C. Plan A, we're taking this trade. It hits target, beautiful. Plan B stops us out. We then focus on the next possible quality counter trend trade. And when that happens, we take that and try to resolve it. And then we even have plan C, where even if that doesn't work, we can go 1, 5, 2 and try to resolve it that way, right? It looks like, I'm kind of dying out here. The market is just not cooperating. So I'll update you on how this trade works out tomorrow. But everybody have a good day. Enjoy yourselves. It should be, it's really, really quiet, but maybe in about a half an hour, it'll pick up before the European close. We get a little bit of price action. Just remember, look, the slope, the blue line continues to just go up a little bit. So not as horrible as it looks for us. Hopefully we get a little bit of a push here to the upside and make it happen. All right. I'll see you guys all tomorrow. I'm just gonna, because I don't want to my hacking cough on you impose it any further. Thank you guys. Everybody have a wonderful day. I'll see you tomorrow, 9:30. Bye bye.